Okay. Hello everybody and welcome back to a brand new video. I'm going to be just doing some back testing or explaining my thought process on Friday the 17th of February 2023's price action. And while we're doing that here, you go to Forex Factory. Because one thing I've actually failed to neglect for recording this, which was my bad, to get the news events, and this is also Friday. Okay, so we actually did have a news driver at 10 a.m. in the morning, which is interesting because one of the things I analyzed in the session and realized was that the morning didn't really yield any good setups or anything that I necessarily would have liked to see, which I'm going to explain in a minute. So the very first thing, I want to start by analyzing the 1 day of this time frame. Hold on. And I finally bought the CME data today, as well as buying the feature or the pro option, which allows me to backtest a little more closely. I hate that I have these on the daily. Okay, well, either way, okay, Friday, March 17th. Let's see what that candle is. Okay, so that is this candle. It's trading below an old low, and we took out these relative equal highs, but we just see price actually moved here. Oh, sorry, on the 17th, it trades below the previous day's low and actually created a fair value gap here, which where we currently are in price is definitely a good key level to have mapped out. There's of course a fair value gap here as well, but at the time of this, I definitely would have been a little weary. One of the things that we can look at is what is price doing or where it's currently heading, and being that we just took out we just had the stop rate here from this previous buy side, we can expect price to move to a discount. This is something where I would have been spectating it. We have these relative equal highs here. I would have been cautious, kind of seeing where the liquidity would have liked to have gone. But in terms of this buy side being taken out, we're already above, this old high here. And overall, we've been seeing lower prices. So ultimately, I would have liked to have seen this kind of price action of us not necessarily going above these prior highs and just taking that short-term high and then continuing lower. And that's still, my bias is still that, we're bearish overall, and that's also just looking at the weekly, which I can do here in a second. But regardless, we have this objective here, we have this objective here. The price action study or the back testing we're doing is for the 17th, which is this small candle in between here, which was also the bottom of fair value gap, which traded below the previous day's low, and then after this day showed a willingness to take out this short-term low here, and we essentially then have a shift in market structure. Price continues lower after taking out that short-term low. Okay, let me take off all this here, and that way it's more clear. We essentially have this prior short-term low that I noticed. Price then continues to trade higher, fails to take out these highs back here, so it pretty much creates these relative equal highs, which I have marked on the chart. All these highs here are very relative, and the volume stays within each other, but it doesn't ever take out this high that's created here, this high here. It does trade up to it, but it just creates relative equal highs. Then we have this low here, which on the day that I'm studying, price goes for this sell side liquidity, just to make everything a lot more clear. And so after I realized that, I want to actually start going down to the hourly and start showing my analysis for that day. It's so messy, but I'm going to explain everything that I was thinking when I was charting this up and studying this price action. So obviously on the hourly, what I'm more looking to do and what I was doing here was I'm looking at where we are necessarily in this range. Okay, so let's bring up the concepts that I had previously. All right, we have these relative equal highs up here, which have, I mean, we've had like trading above them, but they're still just relative, right? And if we look at where we're at with the range, we've had this day where this prior high was taken, which I've also charted as well. That was on the 15th, that was Wednesday. Okay, but we just have to look at, I mean, we're at the end of the week here. Where's price likely to go? You know, where are the next key levels? From the open, we've already traded below this short-term low. I mean, that happened directly, at the open. So where would the next objective be in this range? Am I expecting it to go all the way to this fair value gap up here? I mean, that's definitely like an objective. There's obviously inefficient price delivery here, but this is something I would spectate. I personally was believing that it was more likely for us to reach this level of sell side liquidity before we see anything like that. And so with that said, let's drop into the 15-minute, and I'm gonna go through the levels of liquidity that I had outlined, okay? So, and it looks like a mess, but this is just my annotations. It becomes more clear, you see, as we go through it. And there's a few extra things here. Now, what I've been doing, I really hate having all the vertical lines on my chart. It just confuses me a lot more. So here's the London session, which is outlined just by this little bar here. Okay, within the bar, these are the London highs that were created from 2 to 5 and the London lows. Okay, so I also have the New York session from 7 to 10 marked out here, but also the general hours, which is the general operating hours, which is essentially when we're looking for setups and looking to take trades. Okay, before the lunch hour. So 8:30 our operating hours begin, and initially what we see here is we see price making this swing upwards here, but nothing is really clear. I mean, we have these relative equal highs, but price doesn't aggressively take out these highs. In fact, it seems to almost just create these even more relative equal highs. Like, I don't consider this volume here at 9:15 to be relevant enough for me to see this as a stop rate or a rate on stops, even though the wicks indicate that it wants to go to this prior high. I just don't consider this price action yet relevant. So I'm watching price and seeing what it wants to do. At this point in the market, I'm just spectating, or spectating price action. Okay, so with that said, this is the 8:30 open. Price does trade above this prior high with volume, so we could consider that a stop rate, because anyone here who was expecting price to continue lower would have been stopped out at this time, okay, which engineers liquidity into the marketplace. Now, if we look here to 9:30, the 9:30 equities open liquidity, okay, creates this movement to the downside, okay, and that was relevant to me because of two reasons. Firstly, this short-term low is taken out at 9:30, so that liquidity, that sell side liquidity there is taken. But also we have this the prior low from last Friday. Actually, this low, or this sell side liquidity, is also taken out at this time. And after the 9:30 equities open liquidity injection, we have a lot of back and forth. I have these relative equal lows marked out here, but it's a lot of back and forth. And we can also look at the news driver at 10 a.m., which is the prelim UOM customer sentiment, to have an impact on that. And here's the impact that we see. So from 9:30, which is right here, okay, that sell side is taken, and price just kind of lingers. We just have this back and forth, but it doesn't necessarily do anything, right? I mean, we have this sell side liquidity taken, we have these relative equal lows created, but it doesn't aggressively then take out that liquidity on the sell side. but it also doesn't really take any buy side targets. I mean, this high here, this short-term high is respected. It doesn't trade above that. We have this short-term high that's created as well, but that's created prior to lunch, which we're gonna analyze the afternoon session in here. But I mean, with this being just kind of 50-50, right? Leaving these lows, we had that liquidity taken, and then yes, we have it trade up here, but it trades up here close to lunch, and it doesn't even take a prior high. Taking a trade anywhere from like 11:30 to 12 is just something that personally I view as too risky, as with the lunch hour and with ICT, how he explains it, just kind of doing whatever it wants. I'm realizing that that's not necessarily a time that I want to trade within this model. If I want to take low-hanging fruit, I'm not gonna start gambling, on the lunch hour. Okay. So with that said, this liquidity or this short-term high that's created is violated, and it's violated in the PM session. All this, don't worry about these annotations. I'm going to go over them, later on in this video, or this backtesting price action study. But a few things that I just want to, map out here, okay? So short-term low, okay, taken out, which was the one I was talking about here. We did have a market structure shift without an entry, which is not clear here. I'm going to actually show that on a later time frame. But something like this would have been a forced entry if it would have been taken, and I'm going to explain why I say that. I also notated to look at these highs where there was no significant volume traded, but we see a willingness from smart money to take that buy side. We see them trading up here. We see that kind of liquidity, which it did, later on, but volume-wise, it didn't just with the wicks. The majority of volume then traded later on in the PM session, and I believe that this is also a result of that 10 o'clock news driver. You can see we have these large wicks, which creates a form of this news driver creates a form of manipulation to where all these retail traders who had these short positions and were expecting lower prices, like expecting these relative highs here to be sell side, put their stop right above here and then get stopped out. Okay. And so that's kind of what I believe the reading price. That's my view on the narrative. Okay. So, and then I have this note here, which is lunch takes prior short-term high and retrades to sell side liquidity and sell side liquidity. Wait, did I put that? Taking sell side liquidity and okay, I guess I wrote the same thing twice. But it takes both of these levels of sell side, which we're gonna go over here in a minute. So let's go down to the 5 minute. Sorry, I don't know how to properly do this if I just have to go back when I'm back testing every time, but it's a little annoying. Okay. So the first thing, we have the London highs, very clear. This is the London range that was created. Okay, and here we go. Here's the New York session. So 9:30 trades to the London session high, but doesn't take out any liquidity there, further enforcing the idea to retail that this is a resistance level. That price is not going to trade higher than this. All right, and then we see retail, you think like, oh yeah, it's going lower, like this is just furthering the delusion that that's the right idea. We have this stop rate here, okay, where this sell side liquidity is taken out. Okay, so here's where I first gained the idea on this 5 minute time frame of a potential market structure shift, which would have been a flawed logic due to what I first mentioned. I wasn't looking at the news driver and the impact that this was having, but at 10 a.m. we had that news driver, which explains why we didn't really have a setup here. So I have this video because I've been going through the old videos. I have this pulled up and I want to go through what he talks about in the model again, and I want to refresh myself on that. But if we look, it's very similar. Okay, we have a short-term low. Okay, that's taken out here with massive displacement. We have that fair value gap, and I'll continue to elaborate on why this doesn't make sense in just a moment. but let's look at it for what it is. Short-term low taken out, market structure shift, but it left a tiny fair value gap that wasn't retraded, so no entry. So here's my logic behind that. As we can see in the video right here, we have this this swing low here, okay, and then soon after we have this fair value gap and displacement lower below that swing low. It then retrades to the fair value gap, which would be our entry, before continuing lower. Now we see that trade and displacement below that low, but we don't see it trade to this fair value gap. And what we do see later on is, and I don't have it marked here, but we see this actually during the lunch hour, so it wouldn't have been necessarily an idea or something I would have been paying attention to. But the fair value gap right here is treated as relative equal highs, or treated as, sorry, not relative equal highs, it's treated as resistance right here during the lunch hour, okay? And even after that, it stays and respects that until near the end of the day, where price starts spooling. It's near the end of the day, it's near the end of the week, and price wants to start moving to where it needs to go before the end of the week so it can close where it needs to be. Okay? So, this would not have been a significant entry. Okay? Price continues lower from here. And then when it continues lower, we can't expect any significant move because these lows are respected. Okay? So, after that, we have some relative equal highs here. It's very relative, all these highs are relative to each other. Now that buy side liquidity actually does get taken, but the buy side liquidity, let's just stretch this out because it's all the same. Look, all these very relative equal highs, and we'll move this up so it looks a little more clear. Okay, there you go, very relative highs. So this buy side liquidity is actually taken, but it's taken during the lunch hour, and then after that, this engineer's liquidities. I sound like I'm 12. I noticed this engineer's liquidity all the way to sell side. Okay? And then during the lunch hour, we see price finally take out these relative equal lows, continue below that level of sell side that I mentioned from last Friday, that previous low, okay? And then we have that stop raid. Okay, that creates an idea in my head where now that liquidity has been taken, I'm going to be focusing on not only this inefficient price delivery here, which yes was retraded to, but not with any real volume. Not that it has to, but I still would have had that idea in my head, okay? And for the setup that I'm going to outline, I want to first explain that I do not see anything here relevant in the morning. This is a market that I would have spectated in the morning, and something that I would not have, traded. I would have just watched, just because of the very back and forth price movement, just because where it is on the daily time frame. I would personally have been a spectator for the morning, including with that news driver, which that news driver I have no idea of what impact it has, but I noticed that even with the potential market structure shift that I was focusing on, I don't notice anything, necessarily relevant that would provide an entry idea. Okay. In other words, I don't see any valid setups here in the morning or anything that would have yielded anything I could have been confident with or confidently held. So, with that said, we're dropping down to the 3-minute time frame. Okay, I'm going to go back here. Dropping down to the 3-minute time frame. Of course, I have to go back again. And let's go ahead and analyze this again. Okay. So, what's the first thing I noticed? Okay, so after lunch, again, it trades back to those relative equal lows and ends up taking that sell side. So this was the stop rate that I outlined. Price retraces and creates this high, and then retraces lower, but fails to take out that prior low again. So what's marked here is PM viewing. That's because at 1:30, that's when we're going to start looking to trade the PM session. We're not looking at any of this price action before. When I was analyzing price, I actually made that mistake of looking at different things over here on a smaller time frame, but I actually initially made that mistake. Okay, so I marked this prior high. I mean, I could have marked this high, but it just wasn't something. I felt it made more sense to make this prior high, even though this was closer to the current price action. I knew that there was liquidity residing above this, okay? So ultimately, what I was looking for was for these respected relative equal highs to be potentially retraded to, and I was looking for something very specific that would indicate that we would maybe see price go to those relative equal highs, or the narrative that I was having in regard to this. Okay, so what we see here is this is first exactly what is this? We have a candle with a lower low to the left and our lower left to the right. So we have this swing high here. I don't know, I might be getting it confused. Let me check my notes real quick, because I always get confused. Honest, I know like what it means, I don't know. So yeah, that is a swing high. Okay, so I've been saying it right. So yeah, lower to the left, lower to the right, that's a swing high. We have that high created here. What we have at 1400, which is, let me try to think here. So 13. Okay, so that's essentially, that's 2 o'clock. 2 o'clock, we see price break above that short-term high. We see displacement higher, and we see a fair value gap created here. Now, one thing I noticed in my price action study, because I was really confused with this setup, because it traded low, and I realized that would have been stopped out. So on this 3-minute time frame, there's actually 2 fair value gaps here. And through the public mentorship, he talks about how when you have 2 stacked fair value gaps, there's a rule where you essentially would expect it to then trade to the second fair value gap. So that's why I put this note here, to bear in mind the 2 fair value gap rule and placing a stop loss. Because of that fair value gap, I would have definitely put my stop loss. I would have put my stop loss here, okay, below this candle that created the fair value gap, or the second fair value gap, or the lower fair value gap, okay? So when price retraded into the imbalance right here, that would have been my entry idea. Now, if I had a limit order, I could have done 2 things. I could have put my entry idea where it is here, which would have been the fair value gap, or the top of the fair value gap, and I could have had the entry there. That would have had a larger drawdown. I think it would have made more sense to, in this case, have my entry be at the top of the second fair value gap that I'm right here, okay, the top of this candle, and then that way it would be a lot shorter of a drawdown. Now, what I outlined was a general risk parameter where I wanted to essentially, if I was to enter this trade, I wanted to see exactly where, if I had placed my entry at the top of this fair value gap that was created here, what would I have been looking at for drawdown on the trade, okay? So that's what I have outlined here, okay? This was my entry idea, and that's the level that's marked, or that's the top of the fair value gap. In total, this trade would have yielded a 3-pip drawdown. Now, I want to be honest with myself. I don't feel I necessarily would have been confident, okay, with this entry, just because of the drawdown here. And if I wouldn't have realized this fair value gap, which when I go to the 2-minute, it's not there, okay, which I'm going to show in a minute. But if I wouldn't have realized this fair value gap, I would have been stopped out, and I would have missed the move. So it was very important for me, and it's very important in my development, to focus and understand that if there is a second fair value gap below, I need to be more cautious where I place my stop. Regardless, we have this 3 pip drawdown, so I would have had a 3 handle drawdown. Okay, now my first target would have been this old high. If I would have entered there, would have had a 3 pip drawdown with a 6 pip gain, or a 6 handle gain, being that I closed right here at this first initial target. Now, my two things I could have done. I could have done a partial where I closed partials on my position. Could have closed a partial here and then wrote it to what I was overall expecting with this shift, which was for us to trade above buy side, which it did. It did right here. So most likely, just to be honest, I probably would have, taken the safer option here. It would have probably closed partials of the position here and then still held on a position all the way to this buy side liquidity. So if holding all the way, this would have yielded 14 handles with a 3 pip drawdown from this entry idea, being that I entered here and not entered at the top of the second fair value gap right here, or where I'm outlining here. Okay. Eventually, price does what I expected to do and goes to that buy side, that being marked here by the target, and then price consolidates till the end of the day. So I put here near PM close, price spools to buy side objectives, which it does. Okay, we're almost at the PM trading close where we don't trade the PM session anymore. And from 14, 15, all the way to, so this is less than an hour, we see price just massively move, okay, to that buy side, yielding to setup, and then we see a consolidation afterwards. We see price just kind of do this back and forth, back and forth, back and forth thing all the way to the close of the day. It does also create these relative equal highs here. Now, the very last thing I just want to point out here, and oh yeah, I forget, I just bought the